here. Wonderful. Morning, guys. Good to see everybody again. Hope everybody's having a good summer so far. Just wanted to get on here and just kind of touch base with everybody. Obviously, as the team continues to grow, we want to make sure that, we stay sharp and just educated on what is going on as far as this housing market right now, and just also what's going on as far as mortgage rates and the type of products that are out there. So I really wanted to touch base with everybody and just kind of educate and also, open it up for Q&A. Obviously, what's happening right now as far as the mortgage, as far as the market goes is the Federal Reserve is battling with soaring inflation, guys. I mean, we're in a recession, right? And so, mortgage rates are up nearly 2 percentage points from this time last year. To put that in perspective, guys, I mean, on an average, that's like a $700 difference in payment between somebody who was buying last summer and somebody who's buying this summer. Now, obviously, we know mortgage rates aren't directly tied to like the Fed rate, but they are influenced by it. And so, what happens is when these rates begin to start bouncing around and the media gets involved, a lot of homeowners tend to put their plans off. I saw this back in 2016, 2017, and I think I even mentioned this back in April on our last call. Just this is common ground as far as the behaviors of home buyers during times like these, right? So we do need to be cognizant of that, but we also need to realize that we can't take our foot off the gas, as far as how we work these products, or how we work these customers and how we relate to them as far as their, inability to sort of rationalize spending money when money's tight, and so what we're seeing right now, and I read an article by this guy named George Rashu. He's an economist, and I think he's a contracted economist through Realtor.com, but he made a comment. He said basically home buyers are pulling out from selling their homes because they're concerned about missing a pricing peak. And basically what we're seeing is a reduction in ground gain by that. So you're not seeing as many people list their houses either, because frankly, they're going to be in the same position as buyers are, where they're dealing with, higher interest rates and a lower inventory. And guys, some statistics that I've seen is that, obviously, and I'm sure everyone's feeling this, but home showings are obviously down, and buyers are actually backing out of deals at a higher rate. Mortgage demand's the lowest it's been in 20 years, guys. So what we're seeing is, and I know that sounds so gloom and doom, and it's like, goodness, Ryan, like, give us some good news. But effectively what we're seeing is a perfect storm as far as the recession. The Fed rate has been raised. We're battling inflation. We've got, buyer demand being down, and basically what we saw was like over 63,000 home contracts fell through just in the month of July nationwide. 16% of those homes went under contract at the highest percentage on record, except for in March and April when the pandemic was just starting. So we're really seeing like we're seeing just a lot of volatility, frankly. Now, here's the good news, guys. I mean, homes are sitting on the market a little bit longer. So these buyers who have been on the fence I think every single person on this phone call can relate to a story of a buyer deciding to hold off, right? Or maybe making an offer on 5, 6, 7 different houses and losing out on every single one of them. Well, those times are actually rapidly changing. I mean, we are seeing homes sit on the market a bit longer. We're seeing a little bit of a price softening, as far as you're not going to get those situations where you got 15 offers on a home in 24 hours and the house is going for $50,000, $60,000 over asking price. So what it is it is creating opportunity for our buyers to get in there and really make some headway and be able to actually make an offer on a house. And make an offer on a house that is, that's worth it, right? I mean, again, I spoke to a friend of mine who's a financial advisor the other day about this, and he said, what would you rather have the situation be? Would you have rather been the buyers who bought a house during, the pandemic, where they may have paid $30,000, $40,000, $50,000 over asking price, but got a 3% interest rate on a 30-year loan? Or would you rather be on the reverse side where if your buyers are entering the market now or are pre-approved customers from months ago are deciding to get back out there and start making some offers again, the likelihood is that they're actually offering what they're offering on the house is potentially more than likely what the house is actually worth. Yes, they're getting it at a higher interest rate, but they're actually paying what it's worth. And so that kind of leads me to a few of the comments that I made actually on our last phone conversation, surrounding the idea that, buyers aren't married to their rate, right? I mean, they can always refinance at little to no cost. Something that we do provide through FSB Mortgage is we, for return customers, we cover their origination fee. We cover the cost of their appraisal. We can do those kinds of things for all of our customers. So what that is, guys, is that's just a conversation, right? You get a buyer out there, they're super interested in the house. They're a little bit put off or nervous about the monthly payment that they're signing up for. But you have to remember, I mean, right now, what's going to happen is the forecasts that we're reading are really showing that by 2023, by January, more than likely the Fed's, the mortgage rates are going to drop, because what's going to happen is the Fed has to quiet down their efforts to stifle inflation. They can only do so much. And once they get to that threshold, that's when interest rates tend to drop, guys. That's when people's monthly payments begin to become more affordable. And so, as inventory begins to soften, we're going to see a lot more opportunities. I just can't, stress enough the importance of maintaining positive expectations and the thought and really trying to control the thought processes of our buyers. You kind of got to give them bad news with good news or good news with bad news, saying that guys, we've got, yes, interest rates are, some of the highest we've seen in nearly a decade. At the same time, interest rates still historically aren't that high. If you look at the last 30 years, guys, I mean, if anybody bought a house during the 90s, I mean, interest rates were, 7, 8, 9%, right? So we just have to, I think what happened was a lot of people just kind of got spoiled. And when you get online and you see 3.5% on a 30-year fixed loan, and that's sort of your expectation as you enter into the process, that just sort of needs to be mitigated by information, right? It's important that you guys let them know, hey, here's kind of where rates are at. Generally speaking, they're in the mid to high 5 range right now on a 30-year note, depending on your credit score, and then just sort of defer, right? I mean, let me take over that conversation, or let a mortgage loan officer take over that conversation, so that you look like you're somebody who knew enough, but also put them in the position to gain more information. And again, guys, we're in a recession. Let's not kid ourselves or ignore the fact that, when times like this have happened, again, historically, people tend to hang on to their money. So we need to really just sort of put ourselves in a position to outwork this. A couple good, some exciting things that we're implementing, and then I'll open this sort of up for questions or comments, is we did recently, as of last week, we're lowering our FICO credit score minimums across the board to 600. So that's huge, guys, because I mean, I can't tell you how many comments we've all put in, I've put into FUB saying, hey, this buyer needs credit repair. This buyer needs some help working on their credit. Well, I mean, some of those people are only at, 570, 580. They're not too far gone from 600 credit score. So what I've begun to do is I put a list together of a lot of those credit challenge borrowers, and I'm going to begin reaching back out to them to see if there's some opportunity there for us to provide pre-approval letters to those folks, just sort of get, business moving in the right direction. So again, just to repeat myself, FICO minimum credit score right now, guys, is 600. So if somebody tells you I'm in the low 600s on their credit, fire them off to me and let's see what we can do. At the very minimum, we can run an automated underwriting system approval. Once we get that approval, then we're good to go, and they can get out there and start shopping for houses even with that lower score. Another thing, guys, and I know I've worked already this year. We've been fortunate to have a couple jumbo loans that have closed. What that is, guys, is basically anything financed over $647,200 is considered jumbo or high, high balance. We've actually brought on 3 jumbo investors that allow us to function in-house with those products. That's absolutely huge, guys. That basically means that we're really not, necessarily outsourcing those products. We're able to get them closed fairly quickly, albeit on, depending on the scenario with the customer. But the two jumbo loans that I've done this year have also been with self-employed people, which is obviously, as you guys know, is sometimes a little bit more of a challenge. But that's just huge, guys, because you all have to be, think these the home prices that we're seeing right now in the market, they're increasing significantly, right? I mean, whereas New Braunfels may have been 275,000 3 years ago as a median home price, we're looking closer to 400,000 plus right now. So as these home values continue, or listing prices, home values continue to increase in areas like that, it's important that you have mortgage options for people who may not have 15, 20% to put down to mitigate that jumbo limit. So just want you guys to understand that that's something that's massive. In my 10 years, I've never had jumbo investors this close to the pocket. So it's really nice to have. Also, one other thing, and this is pretty exciting as well, and actually kind of peculiar almost, is we have, assuming a customer doesn't have a credit score, which we've been seeing a lot more of that lately, just from first-time homebuyers entering the market, not having credit cards and things of that nature. We do have a no credit score option, where if the buyer can show that they have rental history, like they've been renting for 12 months or 16 months, we can actually use that rental history as a means to which to create kind of a mock credit score and get them qualified based on that. So that's another thing to sort of keep in your all's back pocket. And obviously it does encourage you all to ask questions to your customers like, have you all had your credit checked recently? Do you have kind of an idea of where your credit scores are? Are you a salaried employee? Are you an hourly employee? Questions like that, and being able to put just some very general notes into FUB like that before I approach them is huge, because that just kind of allows me to steer the conversation and also kind of know ahead of time what type of mortgage product that we're thinking about for them. And then finally, guys, one other thing I want to mention that we're rolling out is we are bringing back on down payment assistance products that should be live by the end of next month at the absolute latest. And guys, again, the reason we did away with down payment assistance is just because the margins were so small, and during COVID, we just couldn't focus on that business. So we're bringing that back on. And actually, the down payment assistance programs that are being rolled out now actually allow for a higher household income. Roughly that number's around $100,000 as a household. So super exciting stuff there, guys. I mean, as far as just providing more products for you guys to be able to sort of get customers turned over. And again, we're seeing inventory soften, so that's going to lead to more opportunities. We just need to get a lot of these FUB buyers and drip campaigns and make sure we're following up with our customers the right way, because they are going to turn. And when they turn, I mean, you want Mid-City to be the name they're thinking of. So with that all being said, I'll kind of open it up for questions or comments and just kind of, fill out kind of where you all are thinking as far as, where the market's at now and sort of what we can all do as a team to work together to kind of get these deals turned over. So.
Yeah, I got a quick one for you, Ryan.
Sure, man. Yeah.
Can you talk a little bit more about the down payment assistance?
Yeah.
I know it's not something that we run into every day, but especially here lately, we've seen some more. I've had several agents reach out to me about that. Can you just kind of tell us what that provides to the buyer?
Yeah, so they haven't rolled out the main details of it yet, Chad, to be completely honest with you. As far as like what the criteria is, I know that the credit score minimums generally are like 640 to 660, guys. So, they will require a little bit of a higher credit score than say your FHA or VA customers, which, I mean, we can go all the way down to 600, for VA and FHA. Okay. Now for down payment assistance, they generally want like a 640 to 660 minimum. Depending on how this one rolls out, with it being a higher household income allowing a higher household income, they may require a higher credit score. Again, they haven't rolled out all the finalized details yet because there's a couple products that they're wanting to bring on. But that being said, what it is, guys, is effectively the borrower is borrowing their down payment. So the down payment is effectively financed with their loan, and they generally have 5 years to pay that down payment back to the lender. Okay. That's the most common type of product. And they don't, so let's say, for example, their down payment's $10,000. What they'll do is they'll amortize that $10,000 over a 5-year period that you pay it back alongside your mortgage, right? There's also down payment assistance products that are more like grants where you don't have to pay that off. And that's where I'm in the limbo right now, guys. As soon as I get the final details, I'll send a message through Facebook and even potentially offer a call to talk through every single detail of the product. But generally speaking, that's what you're looking at. So you're providing a customer with, generally their interest rates are on a 30-year fixed term. So the lowest monthly payment that a customer can experience through a mortgage. And then their down payment is borrowed. And so, again, typically over a 5-year span. And typically what they do is they take the down payment and they divide the total amount of that down payment by the term. So if it's 5 years, 10 years, they'll divide it by that amount. And the customer will generally that will be taken out of their monthly payment every single month alongside their regular mortgage payment, which is that 30-year amortization. Again, once I get the details of that and know kind of what the credit score minimums are, how the down payment is handled as far as payback, I can let everybody know what that's going to look like. Again, most of the time, guys, what you have to remember about down payment assistance, and this is the huge misconception, because especially first-time home buyers, they're thinking that the down payment and the closing costs are one and the same. But in reality, it's not a free lunch, right? The customer is getting their down payment covered, but they still have to come up with their own money for closing costs. I think, and Chad, you can attest to this, but I mean, years ago, 3 or 4 years ago, it was a lot more common for us to be able to negotiate sellers' concessions on a contract. Hey, your customer needs, $3,000, $5,000. We can renegotiate that through contract, because houses were sitting on the market long. There was obviously a lot more leverage on the buyer side. We're not seeing that so much anymore. So what we have to do in down payment assistance situations, once we do get this rolled out, is we want to make sure that customers know they've got to cover their own closing costs, guys. So they have to budget. Yes, you're not having to bring your, $12,000, $15,000 to the table for your down payment, but your closing cost of $5,000, $7,000, $9,000, depending upon their price point, that is going to be their responsibility to budget and bring that to the table. So that's something very important to know, guys, because yes, down payment assistance is going to help you get in the house, but you've got to make sure you've got a little bit of money set aside to cover your own costs.
I think, Ryan, in some markets, we might be getting back to the days where it's a little easier to get that closing cost from the sellers, because they're not getting as many cash offers. They're not getting as many over asking offers, which, those two issues in the past just killed anybody's chances of getting any closing costs paid for. But I think, we're going to see that come back a little bit. But one quick question about the down payment is that the down payment assistance program, is that the loan for the down payment? Is that made by the mortgage company, the same company that's financing the home? Or is that a separate?
Yeah, so that's so there's an institution that we partner with. So almost think of it like two investors, guys. You got your bank that's going to actually originate the loan, the 30-year fixed loan. And then your secondary partner is your down payment assistance lender. And they're the ones who are going to effectively have your loan. So almost look at it like sort of like a second loan or a home equity line of credit that they're paying alongside their primary mortgage.
What kind of interest rates are on those?
Again, they haven't released it to us. I would say that it's based on LIBOR. So it would be based on the same sort of scale that we're basing our interest rates on our 30-year fixed on. If not, then they were going to base it off of a home equity line of credit. So you may see interest rates on the payback, 5.5%, 6%, just right in line with the 30-year fix as far as the conventional mortgage goes. Yeah.
Sounds good.
And sometimes, guys, and again, I don't want to speak too soon, but the last down payment assistance product that we had, there was no separate interest rate for the payback. They just amortize it and you pay it back alongside your mortgage at no interest. So effectively, you're just making sure that if it's $1,000 a year, they'll break that $1,000 over a year against all of your payments, and you don't pay interest against it. So it's almost just like a separate account that you're paying back in full without interest. So that's why I need to figure out, again, and they haven't released the information because there's 2 different types that they're going to roll out. And I want to make sure that I have all the information for each type. And as soon as I do, guys, I'll put a breakdown, and I'll probably just respond in the same email chain that we set this meeting up in. And then we can set up another call like this to kind of talk through all the specifics of each one, so everybody's educated and know what they're looking at there. Because like I said in my, earlier, guys, I mean, we're in a recession. People are going to hang on to their money. And if they have an opportunity for down payment assistance, majority of first-time home buyers will be interested in that. Now, again, the good news about this is, guys, when they originally started rolling out DAP loans, down payment assistance products, there were income limits, and they were low income limits, guys. I'm talking like $65,000 a household, right? So we're not really seeing that anymore because, frankly, across the board, people generally are making a little bit more money than they were then. So it sounds like, just based on the kind of snippet that I heard on a conference call the other day, it sounds like the actual household limits is going to be raised to 6 figures, which is huge because that opens up a lot of families for the opportunity to still be able to take advantage of free money.
Yeah, for sure. And we be talking to our buyer clients about that too. If we happen to think they may qualify, maybe they're, like you said, maybe they're concerned about the recession. Maybe they're looking to hold on to their cash. Well, hey, we can
Right.
find it. We can get you that down payment assistance if you qualify, and you can keep your cash.
Totally.
So let's make sure we're reminded. Because honestly, most agents, I think, who are familiar with down payment assistance think that it's only for people that can hardly afford to buy a house, or super low income.
Right.
Sounds
Right.
like that it's an option for others now.
Absolutely, guys. And generally speaking, these down payment assistance loans, it's only on primary residences too, y'all. So just in case you get a customer that's like, I want to buy an investment property, but I'll use DAP, that's not going to fly. It needs to be a home that they intend to occupy. Okay. So just make a note of that. Make sure that if you are mentioning it to them, or they mention it to you, that it does need to be a home that they occupy full time. Outside of that, guys, I mean, does anybody have any questions outside of that about just, as far as, and listen, I mean, I looked the other day, I mean, anybody who's taking, Zillow leads, FUB leads, guys, I mean, well, there's a lot of opportunity out there. I mean, sit down for block, 30 minutes to an hour out a day and just fire emails off to customers, send text messages, guys. The worst thing they tell you to do is, go to hell or get lost. Really, in reality, though, guys, there's people who just kind of forget about this process. If they were discouraged 5 months ago, they're not thinking about it anymore. It's on the back burner. Sometimes demand has to get created a bit, and interest has to get created. I know myself, I drafted up emails and sent out just saying, hey guys, inventory's picking back up. I know that you were sort of on ice after being discouraged from getting a couple offers denied a few months back. Inventory, there's more opportunity out there. Let's get you back in touch with your agent and try to get you back out there shopping. Again, it's not always going to work for everybody. And some people put their foot down and say, hey, I've already decided to put this off till after the first year. But we have to keep kind of just tapping them on the shoulder and seeing what's going on. If you have any FUB clients that you've put detailed notes in there and you obviously had a good rapport with them early on, go through your FUB and start reaching out to all of them and try to figure out a way to kind of get demand revved back up and say, hey, sort of what's your timetable? Are you on a month-to-month lease right now? Are you on a 6-month lease? What's our timetable for buying, so we know how to put you back in the driver's seat here? Because rates are going to drop, guys. That's a fact. I mean, yes, they're higher right now, but they're higher right now because the Fed didn't know what to do with inflation. And again, the recession is sort of causing just chaos as far as the media goes. And we know how that goes. People see the news and they say, oh, well, let's go ahead and turn that button off. At the same time, though, a tool that you can use to kind of sway your customers, guys, is say rental rates are up 25% from last year, 25%. I mean, the average rental rate for a 1-bedroom is pushing $1,800 a month right now nationwide. So that's a mortgage on a on a $300,000 house, $350,000 house, guys. So that's one comment I would make to you is just say, hey, figure out a way. Listen, you all, I'm happy to sit down and we can work together to kind of create an email chain that you all can blast out to try to get a little bit more interest revved up. That's something I've done over my careers and even working with CRMs directly is figuring out ways to kind of word emails to make sure that we build demand and try to get people back on the horn. So I'm happy to work with you guys to put emails together like that and try to get to get interest peaked again.
Hey Ryan, real quick, just curious, how's the communication in Follow Up Boss between the different agents and yourself, and as well as the connection that's going on between the potential buyer and the agent connecting them to you?
Yeah, good. That's a good question, Michael. So the biggest thing with FUB, guys, is if we're calling these leads, every single day, especially for the first 7 to 10 days, if you're not treating that lead like it's gold, you're just costing yourself business. I'm not going to mince words. I mean, when I got into the mortgage industry, it was a call system, and we had a cadence on how we reach out to customers in the first 7 to 10 days. If you're not calling them and texting them and emailing them until they tell you to get lost in the first 7 to 10 days, you're not going to be able to convert at a high rate. But as far as Michael goes in terms of communication through FUB, guys, if you put the @ symbol and make sure that you tag me in it and ask me to call right away, I will drop everything I'm doing. I will pull my car off the side of the road, right, to call that lead right away. But you have to communicate through FUB and put the @ symbol, or if you're not comfortable with how to use that, we can get on a call like this. I can screen share and we can talk through kind of what that looks like. But ultimately, guys, I told you on the last call back in April, I'm calling through these leads right there along with you guys. I have a CRM that these leads are going into separately that are emailing and texting them as soon as the lead comes through, guys, in addition to me calling them. So I'm not going to put a note in there to just show you guys, hey, call, text, and emailed anymore, because I'm calling, texting, and emailing every single one of these. But for you all, I think it's just a powerful tool to keep yourself accountable as far as putting a note in there saying, I called and texted and emailed. That way, when you get in there the next day, yesterday you called, texted, and emailed. Okay, what do we do today? And move that around, right? When it comes to communication with me, again, if there's a note, if they need to get pre-approved, make sure you put the @ symbol and make sure that I know right away. And if it's a real urgency, like these people want to go see a house this afternoon, put the note in FUB and then jump online and text me or call. Just pick the phone up right up and call me so that we can make sure that we, manage the customer quickly and efficiently. Because if they have to wait for me, or the @ symbol didn't get put, or I didn't get texted and a few hours pass, I mean, guys, realtors and mortgage lenders, they're a dime a dozen, and we can't be naive enough to think that these leads are exclusively ours. Somehow these people may get in touch with someone else. So it's very important that we reach out and make sure we keep in contact in real time together. Is that jive with everybody? Yeah.
Yeah, it makes sense, right?
Yeah. So, and then guys, listen, if you get a customer and they're self-generated, a friend of a friend or a referral or what have you, listen, time is of the essence, y'all. You want to treat everything like it's like they're on fire, right? I mean, send them, get them in contact with me. I've been doing, like warm text introductions, guys, where it's like, you add me to a text thread and say, hey, this is my mortgage lender, Ryan Jett. Let's go ahead and get you guys connected right away. So that way, there's no lapse in communication. There's no, go ahead and reach out to this person. No, we've already connected, right? And that just kind of puts, again, you guys as the realtor in the driver's seat. I mean, the idea is to create a team around us, right? And kind of what we're doing here. So that's another powerful tool, guys. As far as putting the @ symbol in FUB and making sure that you're requesting me to do what I need to do. But also, don't be afraid to do a warm text introduction, say, this is my mortgage lender partner. Let's get you guys connected. Ryan, can you take it from here? All right. Anybody else? Anybody else have any questions or concerns, comments? How are y'all feeling about it out there? I mean, is it, are y'all seeing a little bit of inventory pick up in certain areas, or are you feeling like the leads are serious when they come through? I mean, it seems like there's also been sort of a lot of cash buyers that have come through FUB lately as well. Anybody want to comment on that?
Yeah, I've seen a lot of cash buyers, and then on the other side, it's people that don't want to get approved. But inventory's picking up, and it's getting easier, and I think we're gonna have a really good end of the year.
Mm-hmm. Yeah, again, I think we're seeing a lot of these people sell their houses across the country. You got these California buyers who are selling houses for $1 million and coming to Texas and saying, hey, let's get in there and take a look. If a buy, and that's another thing, guys, too. And I know that's such like a slippery slope when you're dealing with somebody who's like, I don't want to get approved, but I want to go in the front door of somebody's house. And I had a conversation with Michael the other day. And honestly, Michael, I would love for you to kind of share your insight with these guys about that, kind of how you approach the customer mindset of, hey, show me the house and then I'll get pre-approved, right? Do you want to just kind of reiterate that? Not to put you on the spot, but I just thought that your comments about that were like so nail on the head that it would be good for these agents to sort of realize how to navigate that conversation.
Yeah, obviously it's something that you have to walk tenderly into, but I've had several people in the past ask me, hey, well, I don't want to get pre-approved right now, but we want to go look at 3 or 4 houses. Well, so one thing I say to them, I said, well, let's think about it this way. It's not really like, you're going to a car lot to buy a car, where there's salespeople out there just waiting to greet you. We're setting up an appointment to ask a family to remove that may have kids, small kids, to remove themselves from the home, and with the anticipation that you're somebody who's seriously wanting to buy this home.
Right.
If you were selling your house, would you want your wife and your kids to have to get up, leave the house, come back a couple hours later every time somebody was coming in that didn't have any real intention of buying the house? They just wanted to go kick the tires. House buying is not like car buying, so just kind of treat it like that, get them to think differently about it. And when they understand that, I think I've had a lot of guys go, oh yeah, you're right. I wouldn't want to remove my family from my home for somebody who's not serious. So just another way to think about it, guys.
And also to add to what Michael said, on occasion, if you've got a real hard-headed buyer, you can mention that, hey, this particular listing requires pre-qualification to be sent to their agent before the showing is approved. We all know that there are quite a few not quite a few, but there are some listings that do require that. And it might be a little white lie to your buyer, but I think that it's appropriate, in some cases.
Definitely. That's great, Chad. I mean, again, like, yeah, guys, I mean, here at the end of the day too, I mean, we're not seeing the fire sales. It's not like if they go see the house and they've got to make a decision in real time and they need that pre-approval letter physical in hand. Like, people are understanding that the demand aspect of that is sort of like loosening, but that doesn't mean that you guys don't need to do due diligence, that we don't as a team need to do due diligence. Because frankly, guys, gas $5.50 a gallon. You don't want to jump in your car, drive across the state to show a house to somebody who isn't willing to be serious about this process. And so, take what they said, grain of salt, make sure we're implementing that in our conversations. And guys, listen, I have a mortgage pre-approval application link. I mean, say, hey guys, listen, I'll text you over the mortgage lender's link. We can get you pre-approved here in a few hours. Every single agent on this call can guarantee that. Right? That if they fill out the application real time, which they can do from their cell phone or tablet, laptop, whatever, we can have a pre-approval letter in their hand within an hour of them filling that application out. So there's really no excuse. I mean, as far as them getting out there and doing it. And I know it's, again, you don't want to mess the deal up. And listen, make sure you're asking questions up front, like, hey, are you a cash buyer? Or are you somebody who's going to need a loan to buy this house? That question right there is going to drive everything. Because if they say, yeah, I'm a cash buyer, okay. Well, you don't need credit score. You don't need any of that. Just get out there and show them the house. But you're not going to know that unless you ask. So make sure we're asking those kinds of questions up front too, guys, because I mean, that's all ultimately going to lead the conversation. And like I said, I appreciate everybody who's putting notes into FUB. If it's a cash buyer, put cash buyer in FUB so I can keep, so I can keep moving through the list. Okay. That saves me time, saves you guys time from having to communicate with me, all of that. All right. Anything else anybody has? Any concerns? Anything you guys are struggling with?
Ryan,
Serena.
Ryan, do you do construction loans?
What's that?
Do you do construction loans?
We do. We broker out construction loans. Craig, you on the call? Real quick, I'll let him take over that because he communicates with the broker channel. As far as construction loans, Craig, Lorena was asking if we handle those in-house construction loans.
We broker them out. It just really depends. I mean, depends on the builder, obviously, right? If they've got if they're holding the note and then we do an end loan, obviously any lender will do those. The construction loans, the one-time close deals, which are where they put 5% down, then they don't have to turn around and refinance when they're done. Those do get brokered out. I'll be honest with you, it's that most builders don't like that process because the lender is going to be in charge of their draws and how many times they come out there. So it is an option. To say that it's a great option would be, yeah, it'd probably be an understatement there. It's not the best option we have for construction loans. Typically, the route that we do here regionally for construction loans is they'll put the 20% down, right? So are you talking about 20% down buyers, or are you talking about more like 5% or 3% down buyers?
20%.
20%, yeah. So typically the way that's handled, what I would do, and I hate to turn our business away, is I would get them approved with like a local credit union, and then you could revert them to us for the end loan, right? Because they'll put their 20% down, right? And then they'll have a, interest only loan or not a permanent loan. And then we can turn around and do the end loan and refinance them into a permanent fixed 30 or 15-year note, whatever it may be. So,
Thank you.
And Lorena, those refinance loans that Craig mentioned, that permanent financing loan at the very end, that just treated like a regular loan, like a regular purchase loan that we would turn over within 21 to 30 days. We get an appraisal, we go through the whole process, but it's just a regular loan. So, and we do those. That's what we do regularly anyway. So, and again, that's if they already have the construction loan in place and they need permanent financing, guys, after the fact. Okay. We do handle those in-house. So, yeah, that's a good question. Thank you. Anybody else?
Hey, Ryan.
Yeah, what's up, Nikki?
You mentioned earlier in your spiel, I do think we need to work on our drip emails. We need to work on the content of our drip emails. We use what Follow Up Boss has given us.
Like just their automated responses?
Yeah, and I think the guys over time have tweaked them a little bit, but if you have any ideas, if you want to go through that and look at it.
I'd be happy to.
Yeah.
I would be happy to. Yeah, of course. I mean, because you guys got to think, I mean, the information that these customers need changes all the time. So if you just leave the drip automated emails and text messages the same, it's not going to feel authentic. It's not going to feel like it's in real time. So I think, one thing that I know Cray and I have sort of done with our office is really just turn around and say, let's give a little bit of information with every email. So that way it's not like, hey, give me a call back. And there's no context. The customer's gaining nothing from that email. So they're obviously going to be a lot more likely to just delete, or what have you. So that's something we can work on together, Mickey. I'd be happy to do that. I mean, again, making comments like inventory's great news. Inventory's picking up here. We've got a lot more opportunities for our buyers. We're seeing more homes hit the market than we have in the last 6 months. Information like that gets people excited to pick the phone up or respond to an email or schedule a buyer consultation. So yeah, absolutely. We could work with you on that. Sure thing. You and I we can hop on a call separately and work together on that. I can also send over some things that I think, because I'll go through FUB and just look at what some of those automated emails are, and I can tweak some of those. That's not an issue.
And
Yeah,
you
and
know, they
Go
do
ahead, Mike.
work. I mean, what?
Oh no, I mean, you guys are
Yeah,
getting,
it-
I
it
mean,
doesn't work, but just like you said, they need more context.
mhm. Yeah.
And they're easy to edit and to make changes. You know, I've, like Mickey mentioned, I've done a few. I've changed up a few over the years, but they've kind of been the same. But yeah, easy to change. So let me know if you need some help with that, Ryan and Mickey.
Yeah, sure thing. Sure thing. And again, guys, I'm happy to like share sort of like automated, like the text message threads. They go out. I can also help you guys kind of manage those as well. If anybody wants to get on one-on-one with me and sort of just talk through kind of how we can word text messages to get customers to react. Again, I've been doing it for 10 years, you all. I've tried every text message and every email and every kind of thing that can be tried as far as getting a customer to jump. So I'd be happy to work with you all on that and help you all as far as that goes. And the guys, again, it's about availability. I mean, if anybody ever wants to hop on my calendar or get on a call, shoot me a text message, send me an email. Let's work together to try to really make sure that we're honed in. The biggest thing is, and I've said it in the last call, I've said it on every call here, is buyers want to feel like they're surrounded by a competent team. Like that everybody is on the same page, that everyone's communicating freely, that they're being treated right. And so that's something that we can really control, under our roof. And especially as the brokerage continues to grow, guys, we want to make sure that we keep our finger on the pulse of what buyers' expectations are, and also work well with me to make sure that I'm your go-to lender, right? That I'm the guy that you can say, I mean, listen, you can get on Zillow, and I don't know if there is another lender with over 135-star reviews in San Antonio or even around South Texas. So, I mean, share the Zillow lender profile with your customers and say, hey, here's a guy who's got 135-star reviews and can cover the cost of your appraisal and work with you on closing costs to help you mitigate your out-of-pocket fees. I don't care how rich your customer is or who they are or what their values are. If they can save $1 right now, they're going to. And if they can work with somebody who you trust and who has a reputation like I do online, that's only going to make you look better. I mean, look at some of the reviews that you all get where it says, man, the realtor hooked me up with a great lender and built a team around me and made me feel safe and made me feel like this transaction was fun and enjoyable. A lot of that is just centered around the team that you build around your customer. So just something to kind of chew on as we get off the call. But let me know if there's anything I can do better, if I can communicate better, or reach out to your customers in a different fashion. Just let me know what I can do to work specifically with you, because all of you all have your own styles. I'm the one who has to be a chameleon to those styles. So just let me know what I need to do. Okay.
Sounds good.
Cool. Anything else, guys? Anybody else have anything? All right.
Crickets.
Well, I won't take up any more of y'all's morning, but again, guys, let me know. Mickey, I'll get with you on those automated messages later today. Guys, just don't be a stranger. Knock on my door. Call me, let me know what I can do. If you got customers that are in troubled scenarios and feel like, hey, let's just see where they're at, send those over too, guys. I mean, we've got those rapid credit rescore programs too, you all. I'm kid you not, I've seen people's scores go up 40 points in 2 weeks just by paying credit card balances down. And they have no idea. They have no idea that their utilization rates are high. They don't understand how credit works. Sometimes it's just getting us in pocket. And now that we can offer credit score minimums down to 600, guys, I think it's going to open up a lot of opportunities for people who, frankly, guys, we just got out of COVID where people, lost their jobs and stopped making money. And guess what they stopped doing? They stopped paying their credit cards. They stopped paying their auto loans and their credit got screwed up. So we're going to have an uphill battle over the next 12 to 16 months with those people who are directly affected by what happened in there. Okay. So we're going to have to overcome it. That's why our bank is taking measures to lower credit score minimums to try to get more customers into houses who were affected in that manner. So don't be afraid to send those customers over. Even if they tell you they're a bit credit challenged, let's try to get them, in the pipeline and try to see what we can do to help. Okay.
Thanks, Ryan.
Awesome, you guys. Hey, listen, I appreciate everybody's time. If y'all need anything, again, just text me, call me. Let's get on a call together, and we'll try to do this again next month. Okay.
I just
Yeah.
said
Sounds-
text.
Thanks.
All right.
Thanks,
Wonderful,
bud.
you all. Hey, have a great day.
Guys.
Let's make it a good one. We'll see you.